Welcome to our second AgRi-Silience Focused Farmer workshop webinar that we are running. We've had the Foundations for Success last week with Bron Steddle from Pinion Advisory. Today we're focusing on finances, the next step with Chris Scheid from More Consulting. For those who don't know me, I'm Penny Keynes, the Project Manager for Livestock SA. We're the state farming organisation here in South Australia that represents sheep, cattle and goat producers. So really this series has come about because we've been observing that producers are coming into a period of stress, particularly around the prices and of livestock and the weather forecast pressure that we see. And while we want to state the long-term outlook is still really positive, we do know that we want to be able to provide as much support and guidance and offer ideas to producers to be able to help them through this period. So generously, we've been funded for this program through the Farm Business Resilience Program, which is a PIRSA and Commonwealth Government program, and also supported from some really great partners in the SA Livestock Consultants, Sheep Connect and AgRi-Silience Alliance. So very important partners we've got on. We'll hear from Chris, and then we've got Sally Close online, who I will introduce later, but she's going to share some of the producer aspect of what she's been dealing with at the moment, and then we'll have another special guest as well. So I'd like to introduce Chris Scheid. Chris Scheid's a partner in More Consulting in Victoria, and a director of the business advisory operating here in regional SA. As a business and management and agribusiness advisor for the past 25 years, Chris is passionate about supporting farming families, family corporates and small medium enterprise to assist solve problems, establish good working systems and identify and harness opportunities consistent with client goals. Chris advises on a range of business matters, including collaborative farming, business restructure, refinancing, business expansion, succession planning. He undertakes most of his work as a non-executive chair of client family boards, and today Chris is really going to help us work through this issue and really help producers consider what they need, understand what they need to consider for managing these lean times. So to start today, Chris, welcome. Thank you for joining us. It's great to have you on board and your wealth of knowledge. But firstly, I'm going to start with a question that I've been asking our previous guest is, how are your clients going at the moment, Chris? Or more broadly, what are you seeing in the red meat industry with producers?
Yeah, well, I think there's no doubt clients are feeling a bit dispirited at the moment. They're on the back of 2 or 3 really good years, and to be selling, cattle at half prices and what they were a year ago, and lambs at half price, and they're still the same prime livestock. That certainly is dispiriting. I think, if I was to summarise a presentation, we often have an executive summary. Some of the key messages I'm trying to get across to producers are that this commodity price shock is cyclical in nature and it will correct. And unless you're thinking about dramatic changes, it's probably not the time to be shifting out of enterprises. Typically, with clients that perform well profit-wise, I see that clients, if they like doing what they're doing, if they can do it at scale, and if their enterprise is suited to their country, that's a simple recipe for profitable success. I think the other thing that another bit of the executive summary would be to be proactive in these times, that if you can see the tidal wave coming, then it's too late. I think at the moment we can hear the tidal wave coming, so there is time and opportunity to be revisiting cash flow budgets and to be projecting our future to see what we can change now. And that's effectively what I've been doing with clients since June this year, Penny.
Great, thanks. I think that's really good to set the tone for today. So as you mentioned, we've seen a large shift in the red meat prices in the last 6 months or so. What have been the causes to that?
Well, I mean, lots of information in the media about the causes. I think very simply it's supply and demand. on the supply side, we've had a big build up in the herd and the flock in Australia. I read in Mercado most commonly that we've got 2 or 2.2 million more lambs we're slaughtering this year. So there's definitely a supply issue. Western Australia have lost their boat trade, so there's a destocking and a wholesale exit of the sheep industry there. New South Wales and Queensland have taken favourable positions on El Nino and decided to do some destocking early rather than suffer the consequences of droughts that they've experienced in the past. So there's 3 key supply issues that's meant there's a whole lot more sheep and a whole lot more lambs and cattle on the market. On the demand side, the cost of living crisis is not only in Australia, but it's in other Western countries of the world that purchase our commodities. So I guess, in summary, we're seeing a perfect storm of an oversupply and an under demand, which will correct because the best thing for low prices is low prices. People do exit the industry, supply comes back into line with demand, and prices pick up. To me, it's really a matter of not shifting out of enterprise. It's a matter of tightening the belt, buckling down, leaning our businesses down so that we can thrive when the upcycle in commodity prices does occur, Penny.
Yeah. So what you're saying is that the long-term forecast is quite positive.
I'm hearing from a number of different, I'm hearing from a number of different commentators that maybe this is 2 years, this cycle that we're going to have to endure. There's no doubt the demand for our red meat product is still strong and favourable. When you look at where sheep, for example, in the world are produced, only Australia has more sheep than there are people. So therefore we tend, and when you multiply that out throughout the world, there's more people in the world than what there is red meat produced. So there's long-term demand for red meat. We're just seeing a temporary cyclical downturn at the moment.
Yeah, so if it's unlikely to recorrect soon, what is a red meat producer can do in this time to survive and I guess then thrive based on what you've just said?
Yeah, Penny, I think we need to look at this in terms of reforecasting and resetting our cash flow budgets. And maybe I might look at it step by step as we might look at a cash flow budget. So when we look at a cash flow budget to start with, we look at the income side and we think about what we can do to change income. And really in addressing that, the executive summary there is there's not much we can do, unfortunately. Lambs are on the ground prime. They've either been sold or they're getting fatter and getting primer and they're being sold. Shearing started. So, our commodities are on the ground and going to be finished. We're not going to be producing any more largely than what we've got on the ground now. Croppers is a bit different with harvest, of course, and their seasons are still in the hands of God, so to speak, in terms of finishing season. But really, when you think about it, there's not much that commodity producers can do to influence prices. Of course, if you're specialising or niche product or direct sales to suppliers, then you do have some influence over price. But for the majority of South Australian red meat producers and croppers, there's not much that can be done to influence price. The one thing that I am finding, though, with livestock, I am hearing that processors are more readily accepting producers' livestock that are produced under QA assurance, like quality assurance schemes. And I guess from the processor's perspective, they're able to shore up and reduce the risk in their supply and improve and make sure they've got quality in taking producers' stock that are under QA schemes. So that maybe is a small tick in the box in terms of getting kill space in processes, and maybe a small tick in the box for in the future looking at QA schemes with processors.
Yeah, absolutely. I think that's definitely been something that I've observed. But I suppose in this time, like we can't influence our income. Is there something that we need to be doing to, you mentioned about leaning down our businesses. Is there something we can do to help with those costs?
Yeah, so again, let's picture in our mind the cash flow budget again. So having perhaps accepted there's not much we can do except shift some income around, coal use, maybe we can put a bit more weight on them through the stock containment area and we just shift them. Well, maybe now we've got to look at the cost side. So when I think about there's direct costs and overhead costs. So let's just think about direct costs first. So direct costs occur as a result of the production that's sold. What I tend to find in the good years with clients is that the belt buckle comes open another couple of notches. So, for example, instead of a 50 cent per head drench, we might use $1 a head drench. Instead of we would normally check sheep for lice, for example, in good times we'll automatically just use a lousicide. So I guess the opportunity out of this little price crisis is that we should go back to our cash flow budgets and actually lean them down and use what we need to use. We should speak to our suppliers, our input suppliers, about alternate products. In supermarkets, you can look at no brand or no name products, or maybe there's something like that that's the same effectiveness, but at a lower cost. I think the other, so that's one thing we can look at on the direct cost side. I think the other thing too with budgeting is that if we copy and paste last year's cash flow budget and look at the direct cost, we're going to get last year's result. We really do need to start from a blank sheet. So look at your production. If I'm selling a B double load of lambs in October, then the commission at 5% or 5.5% or whatever it is for that time when you sell those lambs. Don't accept last year's direct costs. If we look at overheads, often we call overheads fixed costs. Well, they are fixed to some degree, but what I'm seeing, particularly with things like insurance, is I'm seeing 20 and 25% increases in the premiums for producers for insurance. I saw one about a month ago that was a $56,000 insurance premium for a dairy farm business here on the Fleurieu Peninsula that just staggered me. I think there's an opportunity to ask questions about that. I think that many suppliers and service providers have just seen inflation and have just decided that we can increase prices and producers will accept it. Well, I think the opportunity is to push back a little bit and say, hey, 25%, 40%, as I see one participant there has just seen, is not acceptable. And some things we can do there, we can engage a broker. So an insurance broker will often have 3 or 4 underwriters that they can tender your business to. I think you can sit down with your broker or insurance agent and actually go through line by line your assets and work out which assets need to be protected. So do you need to protect 100% of your fencing, or can we protect perhaps a quarter or a third of the fencing? So these are ways that we can reduce overheads to some degree. I think the other part about overheads is that whether it's electricity, gas, whether it's the council rates, or whether it's your professional service provider, your accountant, for example, there's the opportunity to discuss with them a payment plan that suits your cash flow. So finish your cash flow budget, and if you're paying a whole lot of overheads before harvest, for example, then give a call to those suppliers and ask whether we can repay after harvest. I think the point here is that input suppliers and service providers, they don't exist without clients. So it's within their mutual benefit to help you, because the most expensive client that they have will be the client that they need to win, having lost you. So the easiest way to keep a client is to continue to win you, and they can continue to win you by helping you with a payment plan that suits your actual cash flow.
Yeah, good point. So I guess if I think about the budget, we've got capital expenditure. What do you suggest people do in that space this year, given the season and what's going on?
Yeah, I just reflect here, Penny, that there's a saying that says balance sheet is vanity. So what you think my land values are and what I think are two different things. So balance sheet is vanity, profit and loss is sanity. So the result we got is the result we got, but cash is king. And that's where we're really managing for in times of crisis. We're managing for cash first. and profit second, and the balance sheet we get having survived and got the cash result. So one of the things working with clients at the moment is we're really asking hard questions about capital. And I think of capital in terms of two things. Are they capital needs or are they capital wants? So capital needs are things that I have to have. So if the tractor engine blows or the ute engine blows, I've got to have that.
Yep.
So I've got to have a provision in my cash flow budget for that. But capital wants, such as the shearing shed or a new set of sheep yards or cattle yards, they perhaps are things for when the upcycle comes. I think the other thing with capital is I always look, there's a never-ending list of capital items for clients. And what I like to do with clients is I like to get them to prioritise capital in terms of A priorities and B priorities. Now, typically the A priorities are the needs and the B priority are the wants. And typically we've got to do the A's before the B's.
Mm-hmm.
So how do we work out the A's and the B's? Well, simply the A's, I look at the A's in terms of a return on investment. So we know the capital cost of, for example, pasture renovation. Well, we have to look at the benefits and the returns.
Mm-hmm.
We have to look at the cost saved. So we marry up the return on the investment from each of our A priorities, and that gives us an idea about which capital costs we accept in the budget.
Yeah, good points. Yeah. So what about, I mean, we've been talking about a few different options, but what about businesses looking to make some of those capital investments using different types of loan schemes and looking at that? I heard recently that there's been a few people come undone in that space.
Yeah, I think we're possibly talking about the buy now, pay later. So
yeah.
while that's in the household world, it's also in the commercial world as well. So stock mortgage is an example, or stock co-loans. They're examples where you can have livestock now, for example, or assets now. Typically, there's a price to pay for instant gratification, and that is finance. So, typically a stock mortgage, they're on the books, so to speak, but they do come with a price, 1% per month, 1.5% per month. So therefore, it's a capital investment. We need to be looking at the cost of the capital investment, including the finance. I think just a quick word here on appropriateness of finance too. Occasionally I come across producers that are purchasing long-term assets like breeding livestock, cows or ewes on overdraft. So really, short-term finance overdraft should be purchasing short-term assets like trade livestock that you're planning to sell in 3 or 4 or 6 months' time. Long-term assets like breeding livestock or machinery, for example, really need to be purchased on term debt. So the appropriateness of finance is an important thing to consider too.
Any other tips for financing from you?
I think when we look, Penny, at our machinery loans, when we consider how they're constructed, very often machinery loans that the financier requires a deposit, and very often they require the first GST payment, both of them, the deposit and the first GST payment, as the first payment. Financiers do that so that they're ahead of the curve. So they've actually got more equity than the loan value. Now, if you've been going through and paying your principal interest, chattel mortgage or HP payments as per the schedule, then for big machinery assets such as headers or SP sprayers or hay machinery, you could be hundreds of thousands of dollars in front of the payment schedule. So the opportunity here is to contact your financier and see how far ahead you are in your repayments. You can't get the equity back, but what you can do is you can ask, and by agreement with your financier, ask them to turn off 2 or 3 machinery payments so that the equity in the loan balance is back in proportion. So it's a way to, I guess it's a backdoor way to retrieve equity out of machinery payments. Now, if you're a grazier and you've got a small tractor and a ute on an HP, we're probably only looking at hundreds and maybe thousands of dollars. But for the big ticket items, there's possibly hundreds of thousands of dollars there that's available.
Yeah, that's good. So thinking about the cash flow budget and we get down to the line of tax, uh, is that stuck, or is there anything we can do to change that?
Yeah, there is. So the ATO is a creditor, just as you might owe money to the tax office, the ATO, just the same as you might owe money to suppliers or professional service providers. Well, you can negotiate with the ATO via your accountant to look at payment plans for tax. We have many clients that owe money to the tax office, and by agreement, the tax office have payment plans in place.
Yep.
I think the other thing to consider is that on the back of a couple of very good years, what I'm finding clients is they've cleared their partnership, and they're paying tax basically. And in paying tax, the tax office say, well, you've had a run of good years, now you can start paying tax forward. And producers pay tax forward in terms of income activity statements, so IASs. So income activity statement or paying tax forward is based on your last lodged year with the tax office.
Mm-hmm.
For many, that's the financial year 22, which was a pretty good year.
Pretty good one.
So if the 23 year was worse, then get your 23 tax done by your accountant and get it lodged so that the tax office can reassess and reduce your instalment rate so you're paying less tax forward. As a minimum, contact your accountant if you're paying tax. Contact your accountant and ask them whether we can lower down our income activity statement percentage rate to lower tax. Better to not pay the tax office,
Yeah.
better to not overpay the tax office than to overpay and have to get a refund back, I think.
Yeah. I think that's
I think there's just another point here, Penny. So I think there's just another point
yeah.
here on creditors.
Mm-hmm.
So just as I mentioned, the tax office are creditors. So bills in the drawer, so people that you owe money to. There's a courageous conversation here for some, and there's relief once that courageous conversation's had. So as a supplier of professional service accounting and business services to clients, I welcome those phone calls from clients to say, look, we're finding difficult to pay. I'm more than happy to help, and I'm sure your suppliers would be more than happy to help with a payment plan that suits your cash flow schedule. Again, as suppliers of services to clients, we only exist because we have clients, and we want to make sure that our clients do survive, and we're more than happy to help them out in times of need. So if people listening to this webinar, if people are listening to this webinar and are having difficulty with facing creditors, then do consider the phone call to suppliers in terms of having that courageous call.
Yeah. Have you seen those questions pop up that just popped up there around how do we get the courage to do it, and what preparation is probably required to be able to have those conversations?
Well, I think the preparation is knowing your cash flow budget and knowing when you are able to repay. So that's effectively you determining what you would like and putting that to your supplier. The courage question, I guess, in thinking about that one, it's going to be a question that has to come up, whether your supplier calls you and asks about payment or whether you call the supplier with a preferred payment plan. I just think it's better, and it's not easier. I think there's an easier conversation to have once you know your cash flow and you know when you can repay, than to wait to get called or wait to get, for heaven's sake, some sort of debt servicing call.
Yeah, absolutely.
It's a real tough one, Penny. But again, I just present reflection from a supplier of professional service to clients. I really do like those calls from clients who say they're having difficulty to pay, and I'm only more happy to help them with a payment plan or readjust their client service agreement, for example, to help them out.
Yeah.
And I think that producers here on the call or listening to the webinar, if they do pick up the phone, I think they'll find that same response from their supplier as well.
As we said, we're at the bottom of the cash flow budget there, Chris, and that budget reforecast. So what if red meat producers still find themselves projecting that cash loss?
Yeah, what can we do now? Yeah,
Yeah,
so
what's
we've got
next?
to, we've reforecast, we've got to the bottom, we've found that we've got a cash loss or maybe a break even. I think now we're in the realms of finance, and I think we're looking to see what we can do to extend out lines of credit to continue our business into the future. I think that the first point here, and just to reiterate John's point, is that your bank manager and your bank are your business partner. Gone are the days when they're the enemy. They're actually your business partner. They own a piece of your business. And if your business partner was your husband or your wife, well, then they have a right to know and a need to know about how your business is going. So your business partner has a right to know and a need to know too about how your business is going. It's not good enough to tell the bank manager that you're having problems. It is better to tell them you're having problems and here's my suggested solution to my problems. And your suggested solution is effectively your cash flow budget with your assumptions and your request for extensions for finance. I'm finding banks are really receptive at the moment. And when we think about the environment, we've come off 2 or 3 really good years, really good strong price and season yields with them in the red meat sector and in South Australian agriculture. So there's goodwill that you've stored up with banks. Now we're just lending back on that goodwill to get temporary extensions to overdraft or new loans. There's always the possibility, and I think the fear for clients and for people about if I inform the bank, they'll have a wrong impression and I might get sold up. Well, when I look back in the 1990s when I started working with rural businesses, banks had an unofficial policy of selling up and getting rid of poor debts in mortgagee sales. We don't see that nowadays,
No.
and we don't see that from banks nowadays because it's poor corporate image. There's also a whole lot of steps in between a business in distress and selling a business. Mediation between parties. There's refinance. The bank might suggest that you go to another financier. There's brokers get involved there. So there's a whole lot of steps than what there was in the 1990s. And again, just to reiterate, banks don't want to be seen to be selling up farmers and graziers because it's poor corporate image. Just think back to Alan Joyce's final weeks in September this year, where Alan had a great track record, so to speak, but he really tarnished Qantas' image. He's left a train wreck as a result of leaving Qantas. And now the new CEO has to pick up the pieces and try to paint a better picture of Qantas. It's cost Qantas millions of dollars, probably hundreds of millions of dollars. And that's what it costs with a bad image with banks. So let's leave that one there. What can banks do to actually help you with cash flow? If you've repaid principal, they can redraw the principal back and effectively use that as new loan. If it's just temporary shortages of finance, they could do temporary extensions to overdraft, typically 90 days, or maybe there's permanent extensions to overdraft. They can extend out loan terms. So for home loan, there's a lot of mortgage distress at the moment. So for home lenders, what banks tend to do is they extend out the term of the loan, which lowers the payments. So that's something that banks can do. Banks can defer principal, or they can convert principal interest loans to interest only for a period of time. Banks can also, reallocate payments so to suit the seasonality of your cash flow. So no point having a principal repayment or a large interest repayment coming out prior to harvest. Well, let's shift that to after harvest. And I think the other thing that I've noticed recently with clients is there's an element of core debt left on overdraft. And what I mean by that is that if you're not clearing your overdraft in a year, it means you've got core debt locked in your overdraft. So take that core debt out, put that as term debt at a lower interest rate, and then lower the level of overdraft that you require just to shuffle debt around. They're all conversations that the bank can have with you after you've presented them with your reforecast cash flow with your assumptions. So again, your bank is your business partner. You've got to inform your business partner, tell them the problem, but also give them the solution as well.
Yeah, so knowledge is really power.
knowledge is really power. And what it actually does is it raises the bank's image of you as a farm manager too, that are you proactive?
Yeah.
You've thought about it. You're actually coming to me with a solution before I can actually hear the tidal wave. So it actually raises the bank's perspective about you as a manager, which helps you with risk and helps you with your credit rating too. It's part of good business management too.
Yeah.
They understand that things don't go right all the time.
Yeah, there's upsides and downsides. Yeah,
Correct.
absolutely. So I think all of this is really important, but for people on the call today, some of it might seem a bit overwhelming, Chris. I think there's a lot of information and a lot of things that can be done and should be done. Um, what support is there available? Like, how can producers get that support?
Yeah, a couple of things I can think of here. I've been recently involved with third year ag science students at Adelaide Uni. Now, they're a real smart group. So if you've got smart young people in your business, why don't we lean on them and involve them in the business and get their help in terms of constructing cash flows and sharing in the problem and the solutions. I think another thing, that there's business consultants out there, farm business consultants, and just a plug for South Australian Livestock Consultants. So SA Livestock Consultants, all one word, .com.au. We're a group of independent consultants that roam across South Australia. So that website, salivestockconsult.com.au, you can find someone in your area that can help you with cash flow budgets and assist with some strategies. If you use a loan broker, I think it's now time to be leaning on your loan broker and getting some service for the payment that you're using with your loan broker. So a loan broker will have a immeasurable number of cash flow templates. They should be providing a service where they're reviewing your cash flow budget before they go to the bank, because effectively they're the intermediary between you and the bank. So they're at a review point. I think there's a shout out here for Rural Business Support, who offer a free financial counselling service, 1-800-836-211, free financial counselling service. And I know Rural Business Support are really technically competent at navigating cash flow budgets, but also navigating with banks. And then also a call out here for family and business support, the FABs. And I understand John's a FAB, and I think Sally Close, who we're going to hear from shortly, is also a FAB officer down the southeast. So I believe the FABs, they signpost. So you can contact the FAB office and they signpost you and help you, take you to the direction or lead you to a direction that you need to go to help you with your query. But we'll hear more about them in a tick.
Yeah, I
Yep.
think they're really important services, and I'll also reiterate those support services a bit later as well, because I think it's really there's a lot of help out there that people can access to be able to focus on and move through some of these challenges that we're facing.
Yeah, you don't need to be alone there
Not at
by
all.
yourself. There's help there at the readiness. I might, if I can just make one last point, Penny,
Sure.
and it's really about decision making.
Yeah.
And I had a long drive to a clients meeting down at Robe a month or so ago, and it got me thinking about decision making last year versus this year. When you think about the conditions for October last year, interest rates hadn't started rising.
Mm.
It wouldn't stop raining. Grass wouldn't stop growing, and red meat prices hadn't collapsed. So the implications of making poor decisions there are a lot different than the implications of making poor decisions now. So there's a lot more resilience. And so we could be a little bit more casual and laissez-faire, or just use gut feel as a decision maker rather than sitting down with pen and paper. I think you fast forward to today and everything's 180 degrees. Interest rate payments have doubled. It stopped raining. The grass has stopped growing, and we've had a 50 to 60% drop in red meat prices. So the implications of making poor decisions now mean that we should be paying a little bit more attention to our decision making and our thinking, and perhaps looking at making a few more logical decisions, pen and paper, rather than just gut feel decisions. And I understand your next webinar, Penny, in this series of Cam Nicholson and decision making, and
Yeah.
I'd highly encourage participants to get along and listen to Cam for an hour. Very, very insightful.
Yeah, I think that's really a really good segue into that next, and a plug for that next one, because Cam's probably a master of decision making and putting those all the considerations and getting a bit of a informed decision for producers. We just had a question come across. What are 3 or 5 things, you choose, producers need to do today or this week, based on the presentation you've given, Chris?
Yeah, well, a couple of things I can think of. So rally your team together. And in terms of discussing the situation at the moment. A shared problem is better than a problem that everyone's sharing themselves. I think in having shared the problem, it's a question then of what do we do as a result of it. So collecting some solutions to problems, so cash flow shortages. That might mean a reforecast of a cash flow budget, and that might mean contacting your bank to organise and be proactive about looking at not looking at refinance, but looking at extending out lines of credit or other finance. So I guess in summary, get the team together, share the problem. So a people issue, a business, look at strategies and solutions that get summarised in your cash flow budget. And then a business issue as well is discussing with your bank what your suggested solution is.
Good tips. Thanks, Chris.
I'm from Lucindale. Apologies for the McKillop Farm Management Group backdrop. That's not what I wanted, but anyway, that's one of my other roles. So yes, here in Lucindale.
So yeah, as Sally said, she's from a small community in Lucindale on the Limestone Coast, and where she and her husband Chris have established a business focusing on prime land production, and working with communities across the Limestone Coast to develop their community and local economy. So that's part of your role as events and comms officer at McKillop Farm. I guess the reason why we've asked you here, Sally, is you're one of Chris's clients and you've been working with Chris through these exact concepts that we've been discussing today. So what's been your recent experience with your business management from that perspective?
Okay, so yeah, Chris was here a couple of weeks ago, and what we do with Chris when he comes and visits us is we always go through our budget and review our budget. In this instance, we went through the budget line by line, having a look at all the expenses and having a look at the income, and also doing a comparison between, where we've completed the first quarter of the financial year. So having a look at our budgets versus our actuals, looking back, but also looking forward.
Yeah. And so what concepts that we've talked about today have you looked at?
Yeah, so when I say we went line by line, so what we obviously always start with income, because income's up the top. Checking our price, what we're, the budgeted sale price, confirming our stock numbers of what we're selling, checking our timing. So having a good look at the income and actually putting in. I'd already done a review. Chris increased our income a little bit because I like to always budget low on income. So making sure that our income budgeting is accurate and is reflecting what's likely to happen over the season. And then having a good look at each of our cost lines and our interest payments and all those sorts of things. And I guess what you can do you're doing your budget before you know some of your costs. You can estimate your costs, but you don't know exactly what they are. So for example, your council rates, once you get your council rates, you can then lock in exactly your quarterly payments for your council rates over the year. So sort of doing that review of, okay, where are our figures? Where have we estimated? Where can we actually put actual figures? So what I do with interest rates, I've got my interest rates budgeted for the 12 months. But as you get your letter, that lovely letter from the bank we get, quite regularly, saying this is what your interest payment is going to be. And they do give you plenty of notice. So you can then put in that exact figure rather than your estimated figure. So that's some of the activity that we did with Chris.
Yeah. So you're feeling a bit more confident based off of that?
I guess to me, what a budget does is not here confident. It gives you that sense of feeling more comfortable that you are comfortable that you can meet your commitments in the going forward in the future. That's what it does for me. Yeah.
Yeah, that's good.
You also stress test interest too, Sally, don't you?
Yes, I'm I'm using when we first did our budget, before the start of the financial year, I was using 8% as an interest rate, hoping, that we won't get there, but also knowing that if we budget for 8%, hopefully it will be better. So I always like to do things a little bit worse than what we think they're going to get to. And then, as I said, as we get the interest rate notices from the bank, I then put what the actual number is going to be in there.
So err on
And
the
if you
side
don't
of
get there,
caution.
if you don't get there, then you've got that up your sleeve, haven't you? You've got that cash up your sleeve for something else that goes out.
Yeah, and I think interest rates, as we've seen, have been going up, and it's one of those. You can listen to all the forecasters, and you'll get, depending who you want to listen to, one will say they're going to be held, so someone else will say they're going to be going up. So I sort of like to put that worst, well, I wouldn't call it worst case scenario, but build that bit of buffer in.
Is there anything else you want to share with us, Sally, today on this?
I think one thing that when times are good, you can just set and forget your budget. It's something that you do to give to the bank. But I think in our situation at the moment, the budget is really important, and doing that comparison with your budget to your actuals and monitoring your budget is really important, and it becomes a really important tool in your business. And like Chris said, sometimes we can make gut decisions, which might be okay when you've got, economic times are more forgiving. But in the tougher times, I just think that budget's an important tool.
Yeah. Awesome. Thank you so much, Sally, for your time this morning and for sharing those experiences with us. And I also thank you, Chris, as well for your time. We've come to the end of the session with you. But is there, Chris, I suppose we've plugged everyone else. How can we get in touch with you?
Oh, well, yeah, so just simply Googling More Australia, so MOORE Australia. I looked yesterday and you look up the people section up the top and then you just put my name in, SCHEID, and you'll find me contact details, MOORE More Australia.
Yeah, great. Thank you. Also probably
Thanks, Penny.
also find you on the SA Livestock Consultants page as well.
Correct.
Yeah.
Thanks, Penny. Yep.
We've got a few last little bits of support that we want to share. So as Chris mentioned, we have talked about some of these already. We've got the SA Livestock Consultants. You can see that the email address website address is up there, and Chris has already given a bit of an insight into what that group does and how you can find a number of resources. So it's not just finances or looking at your business management. It ranges from all different types of consultants, including nutrition, etc. So have a look on there. If you need someone to help you, I'm sure that within that group of people there's someone that would be able to help you. We've also got Jodie online. She's from Sheep Connect. So Sheep Connect is the group supporting SA sheep industry. It's a collaboration between Australian Wool Innovation and AWI and PIRSA. So a really good place for information. So if you are keen to keep interacting with some of this kind of content, they're there to be able to help and provide that communication. And then finally, if you are feeling a bit like you're feeling a bit lost, or you want to link up with like-minded producers that are looking to innovate and do different things in their community, in your area, check out the AgRi-Silience. They have a list of groups, and the McKillop Farming Management Group that Sally is the comms officer of is one of those farming systems groups. But there's others around that are like-minded and will be able to hopefully provide you with some of that support that you need over this time. And then also check out the Livestock SA website. And as I mentioned, there's the PIRSA Family Business Mentors.
Cool, yeah. As Chris said, and I often say, our role as FAB mentors are figurative signpost. Really, we listen, we observe, we understand what people are saying to us, our clients, and so yeah, we just need to listen carefully what people have. Always taking a packet of biscuits and blood your cuppa, and people enjoy that. And then listen carefully, we can actually point people in certain directions. For argument's sake, like Chris would be a perfect example, of course, rural business support, Lifeline, rural aid. I'm meeting with a rural aid person this afternoon just to get a handle on what they do, just to keep informed. My background is we're consultants as well, work with farming families, but we're farmers. And one of the things I do say to people is that just not mum and dad. I was interested to hear what Sally was saying. Good on you, Sally. That was interesting. Is that, yes, do the cash flows, but make sure other members of the family who are associated with the business know that cash flow, because they'll spend one direction when parents or somebody else are trying to offer restraint, or it might be vice versa. And they need to feel, if you like, need to understand and feel the responsibility, the pressure even of a budget. The other thing I find just in my travels is that the good years meant there may have been a bit of cash around, and with the instant write-off that the tax office offered, or through the government, people were apt to do that. And so the instant write-off meant that people didn't necessarily have money when they bought plant and machinery, so they borrowed that. So that means that later on there's interest payments. And also too, those depreciation schedules are reducing. People haven't got as much depreciation on their cash flows as they used to because of the instant write-offs. And like Chris, I just go through those as well, just a bit of a handy hint and point out the experts in that area. But there's about 12, 15, I think, or so, it varies, FAB mentors around the state. And our role, we're all in different areas. My area is the upper northern pastoral, and there's other members there as well. But it's a pleasure working with people on the land, also small business people as well, just to help them to be, I think one of the insurance companies' ads was a certain friend in uncertain times. And listening to Chris then, I mean, what a joy to have someone like Chris, an expert, to go out and help people. And also Livestock SA, thank you very much for what you do and allowing me to join your webinar.
Thanks, John. I appreciate your the time this morning. It's certainly a great resource, and Livestock SA has worked with the FAB mentors a few times, and have always, with everyone that's worked with the FAB mentors, have always had a really great experience, and really fantastic feedback. So if you are just at a loss for what you might need to do, then they're probably a great place to start to point you in that right direction. We've also got a great resource here in South Australia, the iFarm Well resources. Check them out. There's a lot of different information on their website to be able to guide some of that mental health aspect, because at the end of the day, the most important part of your business is you and your health and your well-being. So making sure that you and all of your team are feeling as strong as possible. And then obviously there's a number of different support services, Beyond Blue, Lifeline, those kinds of services that really are valuable. So if you are feeling a bit lost and wanting to talk to someone, please reach out to them. So that brings us to the end of today. I just would like to share with everyone the next webinar, which has already been alluded to by Chris, which is the Art of Decision Making with Cam Nicholson. I think, as Chris mentioned, it's a really good complementary session to lead on from this one. And then following that is putting some of those decisions some of the information around that decision making into practice with the feed management side of things, with Feeding for the Future, and that will be with Deb Scammell. So another really great SA livestock consultant that that's operating in South Australia to help farmers with their nutrition and decisions around how feeding. Thank you all so much for coming. I'll leave it there. I hope you have a really good and productive day. Thanks for joining.